Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Okay, let's get ready for a great FOMC report. Are you braced? Are you ready? Have you done everything right? Have you made all your plans? Have you moved your stocks into defensive? Have you trimmed off the top? Are you ready? Well, you've got a few minutes left because the rate will be out in exactly 30 minutes from now. So get ready for it. So I'm going to put a clock up in a few seconds time and 30 minutes away. Let's go through all our positions and have a quick look. Let's see where we are. This is where we are right now. We're going to put the clock up here in the top corner. We're going to change this to 30 minutes because we are now 30 minutes exactly. So let me update it. 3-0, there we go. And there it is. The countdown has begun. 30 minutes to go. We're going to keep that right there. Okay. And 30 minutes from now, we'll have the announcement. But of course, the most important thing is when Jerome Powell speaks. When Jerome Powell speaks is when the markets move. And when the markets move, you can see it live on the screen. So let's get ready. Let's go for our positions. We've got Virgin Galactic today up 4.3%. I've already had those fanboys message me and say, hey, you've missed out. No, I haven't. It's down 90%. I don't care. It's up 4% today. I really don't care. It's nothing to be excited about. But of course, people are getting excited because it's going up. Well, I'm not buying it. But I wish you the very best of luck if you are buying it right now. Makes no sense to me at the moment. That could change at any point. People often say to me, you're always changing your mind. You're damn right. The markets keep changing. Situations change. And you have to adapt with it. So let's see who's here in the chat. We've got, first of all, let's have a look. We've got a new poll. If you want to go and vote on our poll, we just put that up. Please go and vote on that. Tio Roll, hi there, folks. Let's hope Martin is right. Well, there's nothing wrong with a rate hike either. A rate hike is good and responsible. I'm only saying what I think is going to happen. Doesn't mean to say I'm going to be right. And there are benefits to both. Let's be honest. You need to understand the difference. And that it's a pause. Well, let's see. Let's see. I am back. Hi, everyone. Hi, Stephen. Where do you reckon Robin Hood will move? Where do we reckon Robin Hood will move? What do you mean by that? What do you mean by where Robin Hood will move? They're down slightly, but I'm up 44%. I've made over $1,000, well, $979 on one position. And I've made 611 on another position. But yeah, happy with Robinhood. Of course, if the rates go up, so will immediately I'll be earning more money. I'll be earning 5% or thereabouts if the rates go up. So I'll win if the rates go up. And my defenses will do well as well. So if you've placed your markets, your stocks wisely, you're going to make money whatever happens. Anyway, let's carry on down the comments. Isn't this also potentially decisively important by the charts? Because if we make new highs from here, several indices break through all-time highs. They do. Very true. Hit the like button. Stream is restarted. Yes, we had a technical problem. The stream did restart. Many of you were over there on the previous stream. Hopefully you'll come to the end and jump on in. And a huge shout out. We're getting thousands of people watch me in India later on in the evening when my streams finish. It's one of the reasons why I kept plowing on with the subtitles. Still not working. They're not working at them. In fact, are they back now? Yes, they're back. Subtitles are back. There we go. We had a few days with subtitles not working, but they're working again now. Great. That's good to see. And the stream restarted. So we had to set up a new stream. Anyway, I hope we get the pause and then upwards spinning El Dorado. Tio roll, I like it. Martyn, do you believe you can break through $45,000 tonight on my main brokerage? No, there's no chance that I will do that. I don't see that at all. I could possibly hit 60,000 total, which if we look at my total, that's possible. That's possible. Let's look at the total a minute. If we go over here and we look at my overall balance, that could happen. I could perhaps get to $60,000 today, but you know, that's a difficult one to call because I have gone in defensive. See, it's not about how much money you make; it's about the fact how much money you don't lose. If you've made money up to this point and then you can just hold for the next opportunity, that's okay. You might not move for a while, but I mean, look how much I've gone up this year. I mean, if you look at it on the all year, I started this in November. I've made over $2,000 on my Roth IRA, and if I go to my brokerage account this year to date, I've made 8,000. So I've made 10 grand this year, which is brilliant, right? I mean, 10 grand in 7 months is pretty good. It's very good, actually. I'm very happy with that. But yeah, that's what we've done. But I don't think there's much left to do. I think the rest of the year is going to go sideways, but I just want to protect what I've achieved and protect it until the next opportunities arrive. But and the next opportunities will be when we start seeing the rates go down. Pause is one thing, but we'll start seeing the market really rally when the rates go down. All right? Because that means other things. That means the war's coming to an end, inflation's coming down. You know, that's when the bull market accelerates. We're not there yet. A long way off that. Get the green lights in place, Martyn. Get the green lights in place. They are, mate. They are, mate. It's just a little button away. They are ready to go. T.O. I like it. Hi, everyone, says Craig. TUP is up 2 days in a row. What's going on with Tupperware? I've no idea. Can't go wrong with Tupperware, can you? Space doing well. Space is doing well today, but I'm not buying that. It's nothing really. 4%. It's great, but I'm not putting my money in it. Not right now, anyway. Hoping for a mighty crash of about 60% in cash, ready to buy. Nice one, mate. Nice one. Good morning. Good morning. Good morning. Good morning. Tim Cook here. Good morning. Nice one. Good morning, Jojo. Good morning. Good afternoon. Good evening. Is it really good morning? Is it good morning anywhere in the world right now? It's not good morning in America. It's not good morning in Europe. It's good morning in India, where my Indian audience are, obviously. Kind of makes sense. They're from India. Makes sense. Yeah, so good morning, good morning, good morning. But for the rest of us, it's most certainly not good morning, right? Anyway, all good. Hang on a minute. What's this over here? I was looking at something thinking, what's that over there? I've seen what it is now. I've seen what it is. You're thinking, what's he talking about? I'm not going to tell you. It's a secret. Okay. We're looking to get a re-entry into Google. Popped up and went sideways. So we want to buy some Google when it goes down. If it goes down, Microsoft did. I made 50%. It's dropped 4.5 today. I have to say Google's better value. And if you're going to buy AI, just hold on to your Amazon. That's my theory anyway. 21 minutes to go. 21 minutes to go. What does everyone feel? What does everyone think? Are you ready for it? I hope you're ready for it. Countdown to the Fed rate decision. Let's hear a little bit from other people.
They're starting to feel the pain.
Let's have a little look.
They were starting to feel the pain a month ago. Maybe 2 months ago. They were supposed to feel the pain much more than they are. Why is it that it's taking so long? And have you pushed out a recession forecast that you still thought was going to be at the end of this year?
We still think that it's going to be at the end of this year. I'd be delighted to push it out into the first quarter, but it's going to be either side of the first year. Frankly, if I go back to last year, knowing what I know now, I would have thought we would have been in recession now. And that's what we spent a lot of time looking at. And we go back to one thing, because the impact of the higher rates, QT, everything was hitting hard back in March when the regional banking system looked on the verge of collapse. And when we looked at the response by the various agencies, we initially likened it to a Bear Stearns moment. In retrospect, that was wrong. It was more TARP moment, because you backstop not only the regional banks, the entire banking system, anyone with deposits of over 250,000. I think that stabilized that. That's injected liquidity into the system. It hasn't changed the end point, which is recession, but the truth is it has pushed it out a little bit.
It also has raised questions about the stickiness of inflation at a time where growth is going to remain strong. I was referring to you earlier. I suspect you'll push back against this idea that we're going to have sticky inflation and the Fed may have to compromise their 2% target. Why?
I think sticky inflation is a load of rubbish. Let's look at CPI.
There you go, spot on.
Year over year, it peaked at 9%. You know where it is now? 3%. Look at personal consumption expenditures. I know everyone wants to look at core. It was 5.4, now it's 4.6. It's kind of stuck there.
Load
We
of rubbish.
looked at the Federal Reserve statement on longer-term goals and monetary policy strategy. And you know what they have in there? They're targeting 2% on the price index of personal consumption expenditures, not core personal consumption expenditures. So that's their metric. And by the way, that was 7% last year. It's 3.9% year over year currently. It's coming down.
Yeah, I just want to tell you, John, that when you say classics at Pennsylvania, Penn, which is a really, really prestigious degree in liberal arts America, that's where you take load of rubbish 302, and that really gets you set on a case to fixed income research.
Load of rubbish. I couldn't agree more. The way the Fed read things and the information is very old and outdated very often. So yeah, I couldn't agree with that statement anymore. Load of rubbish. Anyway, we're just getting ready now for the rate. Welcome to our studio here in Dallas, Texas. We aim to be the most live, most honest, most real YouTube TV channel in the world. I've said it and I'll keep saying it. I'm not a YouTuber. I'm not here to sell videos. I'm an entertainer, a broadcaster in a TV studio. My inspiration is not Meet Kevin, BitBoy, Cryptos Are Us, or even Mr. Beast, even though I mention it. My inspiration are broadcasters, is the news, the BBC, is Sky News, is Bloomberg, Yahoo Finance. I aim to be an entertainer on YouTube TV and always live, always honest, providing the best in audio, the best in video, answer everyone's questions. My aim is to be the best, most live YouTube TV show in the world, and I am an entertainer, not a YouTuber. This is not a YouTube show. This is a family and a community, and you're watching me on the big screen TV. Welcome to the show. Just 17 minutes to go. Welcome. Pete Barker, if Powell's speech hints at any more than the next 0.25 hike, the markets are going to crash. Be careful, everyone. I'm mostly in cash right now in case. Well, this is why I sold profits, 50% profits in Google, 50% profits in Microsoft. I didn't add any more for Tilray today, and we saw what happened with Tilray today. Massive rally. I said it would not be affected by the FOMC fear today, and it hasn't. It's held up. I said it would, and it has, because it's not about buying stocks, it's about buying value. And the value of the company today has vastly increased with the interest and the increased investment of institutions. And that's why I've not bought any more. I don't need any more. The balance is right. I'm holding, but I'm not selling. It's a $40 stock when legislation comes out. But as Erwin Simon said, even though last quarter was a terrible mistake for devaluing the stock when it was down, despite that, they've made some major achievements, and even without legislation, their business is so diversified. The company is growing and has a very bright future. Anyway, it's just a long-term investment. It's a $40 stock. I could see it rallying this year to $6 quite easily. So that would be massive for me if that happens. So I don't need to buy any more. I can leave it where it is. Virgin Galactic, well, it went up. I've had several of those trolls message me, go and see, you don't know what you're talking about. Well, you forget to mention it's down 90% or 98%. So I don't really care. It's up 14 cents in a day. It should be at $10 minimum now, and it's not. You know, whatever. So I'm not buying it. It can go down as fast as it's gone up. Anyway, gold. Waiting to buy some more gold under 180. The S&P is down today very slightly. Waiting to buy some more. Amazon. Waiting to buy some more. Apple. I'm not buying any more. It's a big enough part of my portfolio. Very, very happy with where it is. Next era energy. Great earnings. Great dividend. 3 weeks away from the next dividend date. Great earnings with a 10% increase. Holding this, I've added a lot to this. I've tripled my position on my brokerage position. I've added here. This isn't going to be affected by earnings FOMC today. Not much. I'm flat on it, and I'm happy to own it at this price. I can always clear it out if I want to, raise some money, because I've neither made or lost any money here, and I could sell this very, very quickly if things go south, and take my money back out and buy something else. But I want to be back in within the next 3 weeks because I want to be in those dividends. Are you not going to add if it drops a bit again, Martin? What I'm add in what? What are you asking me to add into? Come back to me and I'll answer your question. Enphase, oversold. Coca-Cola, best earnings in 2 years. Tells you everything you need to know. Johnson & Johnson, $250 target. Trimmed off the top, taking some profits. This could go up today if we get any bad news. CVX, Chevron, Tesla, been buying on the way down. Oh, till right now, no, I'm not going to buy any more. I don't want any more involved in it. I've got enough. It's a sort of the amount I've got. I can forget it, leave it, and watch it rise to $40. Google sideways. Want to buy that. Microsoft. Want to buy that. Walmart. Want to buy that if it goes down. I'm up 30% on my single share. Here's my single share. 7% I'm up on my single share. Beg your pardon. Anyway, we've got 13 minutes to go for the announcement. Welcome to YouTube TV. Hope you enjoy the show. Not that long to go now. If it's your very first time here, let's do some housework. Let's do some housework right now. And here we go. What we need you to do is tap the like button. Because the point of this is, if you tap the like button, you'll be shown more of my content. If you don't, and you down like it, that suits me, because then you won't see me anymore, which will suit you if you don't want it. But also, we'll get an even more higher percentage of engaged viewers. So there's 47 of you watching right now. 47 watching. And if you could tap the like button, let's get 21 up to 30 if we can do that. 95% of my live viewers are members now. So we've gone members again today, members exclusive. That way I can answer all the questions, talk to everybody. Everyone has a voice. We don't have trolls anymore. We don't have all the silly people anymore. We don't have the rah-rah anymore promoting fan clubs of stocks. We just have quality investors now. And that's what I want. It's about building a quality audience than a big audience. I'm not doing it to sell videos. I'm not doing it to try to become the biggest channel in the world. I want to become the best channel in the world. 25 likes. Smash the like button. 26. This is great. 48 watching. Let's get to 30 likes. Let's put a minute on the clock. Let's do it. All right. 25. 11 minutes to go. 26. Can we get 30? Be great if we could. 48 watching. 28 likes, 27. 11 minutes to go before the report is out. 28, Thank you very much indeed, everyone that liked that. Appreciate it much indeed. As I say, if you don't like the stream, please do down like it. It's not a problem for me at all. 28, 29, brilliant. There we go. Yeah, let's put Mr. Mini back in his box. All right. Good stuff. Okay, not that long to go now. Let's go back to our main positions. We're ready. Welcome to our studio here this afternoon. Welcome, everybody. Not that long to go. Virgin Galactic, as said, it's coming back down again. There it is, crashing back down again as fast as it went up. No surprise there. The S&P going sideways. Waiting for the news. Amazon sideways now. Everyone's waiting to see what happens in just 10 minutes and 5 seconds from now. End phase oversold today. Coca-Cola defensives going up. There's your insurance blanket right there. Let's see how we're doing with the subscribers. We're trying to get to 10,000 so we can do our fundraisers without any costs with YouTube. 9,615. Not that far to go. I actually saw something this morning which blew my mind away. Can anyone guess? Can anyone guess? You followed my show for a long time. Can anyone guess how many views I have had in the last 28 days? You'll be absolutely amazed. I can't believe it. I was like, wow. Completely blown me away this morning. And that's thanks to all of you, my members, and our new audiences now joining us in India every day. Let's have a look. Tilray. Likey said Stormy Norman. Randy B, would we be expecting a drop in the tech sector? Absolutely. That's why I've sold my Google and my Microsoft. I made a 50% on both. Absolutely. Absolutely. I don't see a problem with Tilray. I don't see that being affected by this today. It's got a value. See, if you buy value, it's got nowhere to go up other than up. If you buy something without any value, pure speculation, Virgin Galactic right now, it can go down to nothing. It doesn't make any money. Tilray is increasing its profits, and it's also paying off its debts. The very opposite is happening with Virgin Galactic. That is the very opposite of what can happen today. Virgin Galactic, if we get bad news, could go right down to $1 today, easily. Not without much. It wouldn't take a second for it to happen. Whereas if you've got value, and many of the companies that I buy, for example, McDonald's, some of you will say it's overpriced. You can't overpay for land. That's what I invest in, not burgers. Google is a good value, but it got hot, so I sold it. Microsoft, very expensive. Walmart needs to come down. Robin Hood's a 6 to 10x, extreme value there. That's not really going to suffer very much. But our big ones are the defensives. Your J&J, your Procter & Gamble, your Coca-Cola, your PepsiCo, all of that stuff can just go up today because it's value. Its profits are up. Inflation's coming down. Everything about this is defensive and protective of your portfolio. So, yeah. Anyway. 7 minutes to go. We're getting very, very close now. Not that long to go. Now then, we are running a poll on Twitter. You might like to take part in that poll. You've got just a few moments to go before the time is up. Here is the poll. I'm going to give you the link now. This is the poll here. Okay, I'll give you it 3 times. It's in the chat as well, pinned to the top. Everyone vote on this. I'm saying, and I'm going against the grain, but I don't mind. That's the way I always do it. We have here the rate hike. This is a poll you can vote on. Nobody says pivot. No surprise. Someone said skip, 6%. Pause is where I am, 31%. Now, that's nice to see that so many of you are thinking the way I think. I mean, it's just nice. I mean, it's not a good or bad thing, but it's just nice because 99% of the stock market think it's 62%. We have 62%, but the general stock market, the Wall Street, which is always overreacting upwards and always overreacting downwards, say it's going up. Well, it could very well go up. Don't get me wrong. I'm not 100% all in on it pausing, but I am choosing pause because I don't think the rates need to go up. What we don't need is a pivot. We don't need a skip. That would all be irresponsible. A pause is only effective if we say the pause is going to remain a pause and we're going to keep the rates high for another 6 months. That would do the damage to the market. That's what it needs. It doesn't need to go up and then down next month. What the markets want more than anything else is certainty, stability. If we go up this month, what are we doing next month? If we can say we're pausing, this is doing its work, we don't need to increase it. It's good for the markets, good for the economy, good for those borrowing money, good for those people in employment, good for those who have mortgages. But to say it's going to remain high, that's painful enough, but it's responsible enough. That's what I think. Nelly, thank you for your subscription. That's what I think and what I hope. We don't want to pivot and we don't want to skip. That is not good. The market would go berserk if that happened. But that's not what we want. We don't want pump and dump. We want a steady growth. We've had way more growth than we deserve this year. I've made 10 grand this year on my portfolio. Extremely happy with that. I don't want an explosive portfolio. I want a steady growth to 100 grand this year and 200 grand next year. That's what I want. And that's explosive enough without it going bananas. So we want... even up is fine if the sentiment afterwards is we're coming down on the next one. Whereas if we say pause and it's done and we're holding the rates, then at least the market knows where we are. So anyway, go and vote on the poll. There it is. I'm going to give it to everybody on Rumble as well. Let me give it to my Rumblers. Those of you that watch me on Rumble, thank you very much. There is the post for you. I'm also going to give it to my guests watching me on Facebook. Twitter, of course, you already have it because you're watching me on Twitter, so that kind of defeats the purpose, right? There's my Facebook audience. Thank you very much indeed. Please go and vote on that poll. All right. Okay. 3 minutes to go. We've got a great audience this afternoon. Thank you to all of you. We've got 70 watching now. Thank you very much indeed. If you could just tap the like button, it would make all the difference to me. And I even ask you and encourage you, if you don't like my content and you don't want to see when I go live and you don't want breaking news from me, and not everybody wants to hear my voice, do you? Then click down like. That way you won't see me and we'll get a more and more concentrated audience and you will get to see the things that you want to see. The worst thing is just sit there and do nothing. Don't just sit there and do nothing. We got 72 watching. 32 of you have liked. So do something, all right? Be great. You're helping yourself. And sometimes if there are more people sitting there not doing anything, it means we have bots and scammers, which is why we are now focusing on going to members only to provide a higher quality service to my members. Remember, it's not about me selling videos or getting more people to watch. It's about learning and sharing and supporting and getting a better quality of audience. And that's why it's members only at the moment. All right. A minute to go. We can get rid of the clock now. We don't need it anymore. We don't need the clock anymore. We can get rid of that. Let me get rid of that. Has it gone? I couldn't turn the clock off for a minute. Right, there we go. We don't need it anymore. We're seconds away. We'll look at the main markets. I'll very, very quickly, we've got 1 minute to go. Let me share with you my overall position. I'm up on my Roth IRA. I'm hitting all-time highs. I'm $400 off an all-time high. I'm very, very happy. I've got money on hand. I've got money in cash. I'm not concerned. If it goes up, I earn more money on my cash. It's a win-win for me. I don't mind. I'm prepared. I hope you are all as well. Right. It's 1 minute to go. It's time for the rate hike. Here we go.
Think they're going to change anything in that first couple of lines on how they characterize inflation, even with the improvement we've seen over the last couple of months? Do you think 2 more prints down the road, on the 10th in August, on the 13th in September, is that enough information then to make a change at the back end of September?
I think by then, the year-over-year will make it evident that they'll have to acknowledge that inflation has improved.
Here we go.
Okay. That's the runway into the
rate
September
is.
The runway into September. And
It was
beyond that to
5.25.
November and December as well.
If we got
were
a
talking about
pause,
this months ago. We're
is it
trying to get
5.25
2
or
and
is
3
it
meetings.
5.5?
The most important thing I heard in this
The rate in
half-hour
20
discussion
seconds time.
was Mr. Michael talking about, hey, folks, forget about the parlor game. You know how
I've
much
got to
I
be
hate
honest,
it.
I'm very
There's a
excited to
balance
report it to you.
dynamic as well.
Let me mute that. I don't need that. I'll have it before Bloomberg does. I'll have it before Bloomberg. Right, the previous rate in 5 seconds was 5.25. Is it 5.5 or is it 5.25? The answer is, any second now, the rate is we're waiting. We're waiting. The answer is 5.5. It has gone up. I was wrong. It has gone up. It is, oh, hang on. No, yes, it has gone up. It's 5.5. The rates have gone up. Now, that is a good sign because we're not, some people were expecting a 0.5%. It's not gone up 0.5%, and the market hasn't even reacted. I guess they're happy the fact it's not gone up 0.5%. So there we go. We now know the suspense is over. We've got a rate of 5.5. It's gone up 0.25. So we did get a rise. A very small amount indeed. And let's have a listen in.
22 years. In their statement, Fed officials dropped the phrase about pausing to assess the state of the economy, replacing it with, the committee will continue to assess additional information and its implications for monetary policy. Future guidance was identical to June, leaving the door open to another rate move in the future. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the statement repeats, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. The economic assessment is little changed. Activity has been expanding at a moderate pace, perhaps a little faster than the modest pace seen in June. Job gains remain robust, unemployment remains low, and inflation remains elevated. Tighter credit conditions are likely to weigh on economic activity, hiring, and inflation, but the extent of these effects remains uncertain, the statement says, and the committee remains highly attentive to inflation risks. No change to QT. The decision was unanimous. Conclusion, see you in September.
Mike McKee.
That's
Still
it.
on vacation seems to be the message from Chairman Powell and the team. Chairman Powell's got to speak in about 28 minutes' time, the news conference coming up. That statement, a bit of a snooze. So let's check out the price action off the back of it.
There we go. More important is what he has to say. So this is good news. It's good news for savers. It's good news for me on my uninvested cash. We didn't get a 0.5% rate, so the market didn't go ballistic. That's good. It's a very, very subtle rise. What's more important is what Jerome Powell says going into the meeting. That's when the markets will move. But so far, this is good. This is very, very good. It's priced in. The markets aren't reacting at all. They expected this. We want consistency. I'm happy. This won't help Virgin Galactic because any company that isn't making money is now going to be paying even more to borrow money. So Virgin Galactic, it dropped. This won't be good for them. Gold, it'll be good for gold. It'll be good for the S&P, knows where we're going. We can handle that. They priced it in. I'm okay with that. We've seen no real dips, so I took profits off the top. Next Era Energy is down 1%, hardly moved at all. Enphase Energy is oversold. Coca-Cola has stayed up. That's good. J&J is going up for defensive. That's what we expected. Tesla is really just going sideways. This is what you want, really. McDonald's is not doing anything. Tomorrow morning's the earnings, and Google hardly reacted at all. Hardly reacted. This was all priced in. We pretty much at where we were before. This is a potentially good sign, but however, if you followed the FOMC before, you will know the real action is coming up in 25 minutes when Jerome Powell speaks. That is the important part, and we'll be listening in to Jerome Powell speak in 25 minutes. So stay with us. That's what you want to hear. We'll listen in to when Jerome Powell speaks. Walmart going down. Tesco. Tilray Brands, see, not affected by it. Not affected at all. Robin Hood's going up. They'll love this. Robin Hood will love this because all its savers will now just make some more money, and Robin Hood will go up on the back of it. Because remember, when they pay out, they don't pay out as much as they make. They make more money, and so does its users. So I'm very happy there. 0.25, yes, 0.25. 0.25. So I was wrong. I actually said it would be a pause, and I was really putting myself out there by saying that I know it was against the census of opinion. However, what was more important was it was a 0.25, not a half. So we are reaching the top of it now, which is a good sign, okay? A good sign. Remember, a 0.25 could easily be reversed next month. If we were paused, then it would be up there for 6 months. So this is potentially less painful than holding the rates up at where we were for longer. So just need to bear that in mind. But this was already priced in, so the market is fine. Rocket Lab is a potentially a buy for me now. Not quite, but getting there. Our defenses are doing well. In fact, all our stocks are doing well. What's most important is Google and Microsoft didn't rally from this point. I took a 50% profit and I bought back lower. So I will be buying back lower. I could buy Microsoft back now, and I've made myself, we're 39% now, 11%. If I buy it back now, I sold at 50% up. So if I wanted to buy Microsoft back, and let's be honest, there's nothing wrong with owning Microsoft. It is expensive though, but AI is the future. But I do have IonQ and I do have Amazon. I don't have to own Microsoft. It doesn't pay much of a dividend. Its dividend is virtually insignificant now. It is very expensive. It is at an all-time high. I do think we've got some downplay for this kind of stock. It is 37 times earning. I mean, you're looking to buy a value company. Microsoft isn't it. I would much prefer to dump all my money in Google because Google is 27 times earnings. It's a much better value. It doesn't come with a dividend, however, but Google is the leader in AI. Elon Musk is trying to compete against it, but there you go. Now 5.5 raised, 25 basis points priced in. Yes. Now then, what's important is what comes next. What comes next is in 20 minutes time. Thank you very much, Naposa, for following me. Is that Facebook or Twitch? What's important now is what Jerome Powell says at the meeting. Okay, now then, can we do a bit of housework very, very quickly? Can we do a bit of housework? Here, let's bring Mr. Mini-Me up. Let's put a minute on the clock. Here we go. If you could do something right now. We've got 81 watching. If you like my content, tap the like button. You'll be shown more of it when I go live and breaking news. If you don't, I invite you to tap the down like button so you won't see me. That's if that's what you want, and it will give me a much more focused audience, and you will get the content that you really want. So tap the like button if you like this content, or tap the down like if you don't. It really, really helps me, and it helps you. We've got 78. Don't be one of those people just sit there doing nothing. It makes, there we go, 42. We should get at least 50 now in the next 18 seconds. If not, that's fine too. All right, 42, 43. As I say, please feel free to down like is also fine. 82 watching, 43. There we go. All right, thank you ever so much indeed for doing that. Appreciate that very much indeed. But don't ever just sit there and do nothing. Always get involved. 44. Thank you guys very much indeed. It means we've got a few bots watching and scammers, which is why we are in membership only mode, because we want quality on our show today. It's very, very important. Okay, the overall portfolio is holding. Let's go through my stocks now and have a look. We've got 20 minutes to go before Jerome Powell takes the stage. We will cover it live. Get ready for that. Let's go through my positions and see what we've got. Welcome to our TV studio here in Dallas, Texas. 20 minutes to go before Jerome Powell speaks. We're very excited about that. We want to see what they say. To be honest, I don't think it's going to be that exciting. If I'm honest, I don't think they're going to say a great deal. We kind of know where they're going now. We're reaching the top. They'll probably say something like, we'll reassess again. We won't be drawn in or anything like that. But I do think the press will give them a hard time saying we have reached the point where you could have started to pause. Not bring the rates down, but I don't think it needed a price hike today. I think it just holding it where it was would have been quite sufficient. However, they've gone for that, which is responsible. They could have tried to be popular and bring it down. Jerome Powell isn't that kind of chairman, which is good. Anyway, that's very good. Right, here we go. Let's have a quick look. Our portfolio is good. As you can see, I'm in the red. The stock market is in blue. So I am beating the Wall Street again today. I'm green. Let's turn the studio green. There we go. The studio is green. We're making money. I'm beating the market. Wonderful stuff. That's what it's all about. If you can beat the market, you're doing better than the fund managers, which I am consistently. There's my Roth IRA. Quite considerably beating the market. I'm up 0.88 over 0.12. Very, very good. My overall balance is $250, $260 away from an all-time high. So I'm very, very happy with that. Let's go through our positions. We are green once again, and let's go through and have a look at all our positions. Can you show my YouTube and Twitter account, Sensei? Yes, I can. Sensei, of course I will. Would you send them into the chat to me? Save me digging out, please. I don't hold those tabs open. I've got too many tabs open. So Sensei, send that in the chat to me and I will gladly do that. Let's go through our positions. Here we go. We are up on the main account. Virgin Galactic, very weak now. Gold, only buying at 180 and below. S&P's coming up. It's not worth me buying any more right now, however. Amazon going up. There's my AI position. Apple going up. NEE. Right. It's gone down. So I want to buy more on this. I want to buy more. We've got 3 weeks to buy it, though. NEE had a good earnings, beat on earnings. Solar's the future. This is being oversold. This is really being oversold now. Let me look on the RSI. Yeah, way oversold. Way oversold. That is a mistake. Buy when all else are selling. I wasn't going to spend any money today, but now I am. I am going to buy solar. Absolutely. Enphase was oversold, but going up. Coca-Cola, J&J, Chevron, Tesla going up. Don't need to buy it yet. McDonald's, Google, it's overpriced now. Microsoft, no. I am going to buy. The markets have reacted fine. I want to buy NEE before Jerome Powell speaks. So I'm going over to NEE now, solar, and I'm buying that. That is oversold. So here we go. I'm going to buy. I'm going to set a limit order limit order of 74.50 to make sure I get it. Continue. I want to buy today. Yep, I've got on my broker, I got $1,300. I don't mind spending. Let me see what is 2, 5, 300. How many have I got now? 17 shares. 10. That'll be half my money. That will lower me down. Yeah, that will allow me to buy some more. Yeah, that is oversold. Let me just double check something for just a moment. It's been as low as 71, 71, 72, 72. Yeah, we got the earning. Yeah, that'll do. 10. I'll buy, review that. 74, review. I will buy 10 shares of NEE. There we go. 74.42. 74.40. I got it lower. Here we go. This is what I just did. I bought 10 shares. And there you go. And now I can sell my Roth IRA position when it goes up because I've increased it on my brokerage position. So I can trim it out when it goes up. Those dividends are very, very good. That's what I want to do. That to me is oversold. Solar's being oversold again. Didn't expect to see that go down today. Well, that suits me. So I've just bought at 74.40 and it's just gone up slightly since I bought it. You'll see it here on this position here. There you go. 3,200. 3,900. There you go. I'm now just 0.94 down. I was, remember, 4% or more down. I'm going very much into solar right now, solar and wind. Of course, we need that to come off. There you go. So now I've got such a big position in my long-term position. What I can do is I can sell my Roth as it goes 74.45. It's going up straight away. Just bought it at 74.40. Very nice. Very nice. I'm happy with that. So now what I can do, yep, it's going up as I'm looking at it. Good. So now what I can do is I can go back to my Roth. I've got $1,200 there. I can sell that. I'm only down 1%. I can sell that at any point if it pops a little bit, make a bit of money on it, and use that money as a source of funds to buy something else. I don't need that much solar. Virgin Galactic is going back down again. I'd see that going to 150 still. Gold. We've got 14 minutes before Jerome Powell speaks. Amazon. Apple. Yeah, there it is. I bought it at 74.40. The dividends alone will pay for that. Enphase. Coca-Cola. I've got enough. J&J. Good. Chevron. Tesla. Rivian. McDonald's, yeah, McDonald's tomorrow morning. I've got $600 left. Google, no, too expensive. Microsoft, too expensive. Walmart, Tesco, Tilray, Hood. Yeah, told you Hood would go up, didn't I? That's because the rates, they'll love that. They'll make money on that. But it's not too high, so investors will carry on investing. Rocket Lab USA, Plug, Procter & Gamble, defensives. I want to get out of Rumble if I can get 10% up from where we are now, that is. Faraday, Rio Tinto, too expensive. Meta, too expensive. Bitcoin's not going anywhere. Polygon, I bought at 38. And Ripple back up to 71 XRP. Okay. All right. Sinead O'Connor. Oh dear. She died today. Nothing compares to you. Great song. Remember that when I was a teenager. Love it. All right. Sinead O'Connor. Oh, dear, oh, dear. She died today? Nothing compares to you. I just do a double check to make sure it comes across. I've got to stop doing that. It's a bad habit. Right. NEE still falling. I'll keep buying it. I've got another $600, and then I can sell my Roth and do the same thing again. But, anyway. Still going down. I can't keep going down for long. Makes no sense. The value there. The value is there. The company are making money. They're increasing profits. That makes no sense. 76, yeah. No sense at all. Fair value, $82. Yeah, there's your value. If you want value, there it is. I can't make it clearer than that. I've just bought that. Very, very happy with that. $56 young. That was that all. 56. Blimey. That's 2 years older than me. What, 1 year, 1.5 years older than me. Bloody hell. Right. 10 minutes to go before Jerome Powell takes the stage. $74.39. Her 70-year-old son died 18 months ago. Broken heart. I heard that. That's a great shame, isn't it? Yeah. Virgin Galactic coming back down again. Gold. We've got 10 minutes to go before the speech. When we get Jerome Powell take the stage, I shall be ready to go. I'm holding the studio green because I am green at the moment, as you can see. I've just bought Next Era Energy. That took a dive. No reason for that at all. Solid company, solid balance sheet. Very good. Bad reaction that to solar. I'm all for that. I just bought it, added to my position. The dividends alone will pay for that. It's a great dividend. Anyway, anybody else with me on that? I wonder. Look, 2.36 dividend. Solid. And they're increasing it by 10% as well. There we go. That's an overreaction if I've ever seen one. That should not have happened, and I'm glad it did. Because what I will do is if this can go up just 1 or 2%, I will sell my Roth position, put the cash back in the bank, and I can buy something else because I've bought it on my they at 74.50. Wow, did anyone just pick this up with me? Am I the only one? Tell me I'm not the only one. That to me was obvious. Anyway. Enphase going up. Coca-Cola going up. J&J going up. CVX going up. Tesla sideways. Rivian going back down again. McDonald's tomorrow morning. Google going sideways. You're not going to buy it at this point, are you? I sold it at the top. DCA dollar cost averaging with NEE. Nice one. Yeah, absolutely. That's crazy. The balance sheet is too good. That's value. It's got an $88 fair value. For me, it's a $100 stock. Yeah, I mean, that's a no-brainer. See, the stock market always overreacts upwards and downwards. That just gave you a gift there. That gave you a gift. It's still a gift at this price. But if I can get up 1% from here, I can sell my Roth position. I only bought yesterday. I can sell it and put cash back in the bank and look for something else if anything's available. If nothing else is available, I mean, to be honest with you, I'll just leave it there because we've only got 4 weeks to go, 3 weeks to go, ex-dividend date. The share. Remember I said to you the share price is going to rally like 5 to 10% because the dividend's going to be paying out in the ex-dividend date is in 3 weeks' time. They announce what the dividend is, and it's going up by 10% on the 28th of July in 2 days' time. So that's going to go up. You're going to miss out on that one. I'm excited about that because I'm trying to get $100 a month dividend payouts. That's my one of my targets. I picked up 74.39. Very, very nice. There we go. Randy just bought some. I bought 5 shares of NEE. Very good. I just bought 20 shares. Oh, thanks, Martyn. You're very welcome. There you go. Look, the stock's going up. We're all buying it. For those of you that are new to investing, even though I make a joke, I just want to be absolutely clear. We cannot influence a stock. Some people think we can. Those people we don't have on the show anymore. That's why we're in members only mode. People think, oh my gosh, you can influence the stock. You can't do that. I say you can't do that. You absolutely can do that if you have millions of people watching you and we all buy millions of shares. Yes, then you can influence the stock. With 62 people watching me and we're all buying 10 shares each, no, it won't manipulate the stock. Be good if we could, right? But we can't. Anyway, just a word there for those of you who think, oh, can we? No, we can't. We can't. Anyway, that I wouldn't even want to anyway. Right, my portfolio is great, stronger than before now. Okay, we've got 5 minutes to go before Jerome Powell takes the stage. Let me go across my portfolio. Very, very happy. I've got NEE at the best price ever. Happy with that. There you go. My portfolio is green, way ahead of the market now. Way ahead. The actual market is underwater today. I've still got $600 in cash. Nice. My Roth IRA is going up while the stock market is going sideways with some cash. And my all-time high is just $230 away. Great. And to be honest with you, I could make a couple $100 in the next month just on my dividends. So actually, I could be at an all-time high without doing anything right now. This is exciting. Who's excited? I'm excited. I'm always excited, right? Did you notice today, by the way, we had this big upgrade to my sound system. I want my sound to be better than a TV, better than a radio. I want the very, very best for my audience, my members. So we had a few days of it. It was good. Then it was a bit nasally. It was a bit too much production. I trimmed it back, made some adjustments. I'm always looking to perfect it, but I think today we're good. Today it's getting very close to where I want it. So hopefully you will agree that the sound is good. It should be tight. If you listen to it on a good stereo, good sound system, you should be able to hear the lows and the highs. No noise at all, like zero background noise. Hopefully you can hear that. Right, 4 minutes to go. I did ask Sensei Crypto to send me your Twitter link and your YouTube link. I don't hold that on my tabs, but if this is going to be a regular request, I will build it into my studio, but I don't currently. If you want me to have that, I will, but I haven't got it on view right now. Send it to me and I'll add it in, and I'll build it into a permanent position. Right, here we go. Jerome Powell, seconds away. We've got 3 minutes to go. We'll be listening to Jerome Powell in a moment. We're just waiting now for Jerome Powell to take the seat, to take the stage. Now, for those of you who are, let's go back to red. For those of you who are unfamiliar with this is the most important part. The rate is great. The market's already guessed what it was. I didn't. I was actually hoping and expecting a pause. We didn't get that. But what's important is what he says. And what we want to hear him say, and I don't think we're going to get, is because he'll want to always put pressure on the market, right? He'll say something like, we'll reassess next month. So no one really knows. That he won't say, because they've raised it and it was unanimous, he's not going to say we're done, we're happy. You know, that it means they're still being aggressive on rates. I mean, even though it's quite dovish, it is still applying pressure. So I don't think we're going to get any nice niceties from Jerome Powell, put it that way. Right, well, just a few seconds to go, so we're going to get ready. Jerome Powell will take the stage in just in a moment. We have it ready to go. We are back green again. There's your NEE coming up. For those of you that bought at 74.50, 74.40, very good. I'm 1% out of the money, and I might sell my Roth position and bring some cash back on the table. This is good. My defenses are doing very well. Yeah, we're not going to see, I don't think we're going to see Google or Microsoft do any big dips anytime soon. So there's nothing there to be gained. The market is recovering. Yeah. Walmart, Tesco, Tilray held up. Look, see, didn't go anywhere. Robinhood liked it. IonQ, Rocket Lab. Any company with debt doesn't like this, of course. Right, okay. We are about to go over now to the rates, to Jerome Powell taking the stage. $20 seconds to go. We're normally there. Not there yet.
For putting together this just
we'll listen in.
Conversation, collegial disagreement.
When this starts, I'll be quiet.
From Marquette academics to UCLA academics to University of Pennsylvania academics is this is a press conference without theory. And I know I'm going to get pushback on that from Mike McKee and others, but off the pandemic, they're flying blind. And Bob, I would say they're as data dependent as we've ever seen.
Yeah, I think so.
Ever.
Well, look, I think that you are right that this is perhaps a theory-free Federal Reserve that's still trying to hew to some of the theories that underpinned.
We're waiting for Jerome Powell to speak.
I would argue one of the biggest.
We'll just mute
John,
that just for a second until they start to speak, but we are ready to go in just a couple of moments.
To your point, the lag, the variable long and variable lag.
Super long.
Super long, really short. But also variable. So then how do we then talk about the efficacy of what they're doing?
Lisa, they don't know, which is why they're in the risk management business.
Just a few seconds to go. I'll bring it to you the moment it begins.
Too soon or holding too long. And that's really, really difficult to do. I think it's easier to say we need to cut because we've gone too far. It's harder to say.
And we're just a couple of... Here we go. Any moment now, I'll take the stage and I will stop talking and we'll listen in. What we want to hear is... it's coming. Is they're going to... here we go.
Conference with Chairman Powell, who just enters the room. Your equity market negative 0.2% on the S&P 500, following a 25 basis point interest hike from the Federal Reserve. Here's the chairman of the Fed.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a 1/4 percentage point, and we are continuing to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by 5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Steve.
A very
Mr.
short
Chairman,
speech
thank
today.
you.
Very short.
You have, I think, a couple times in your opening remarks talked about this language in determining the extent of additional policy firming that may be appropriate. Should we take that to mean that additional hikes are likely on the way? And should we also believe that all future meetings, say September and November, are live, or are you in a every other meeting mode? Thank you.
So we haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language, to return inflation to 2% over time. I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation remained strong while cooling a bit. And the June CPI report actually came in a bit better than expectations for a change. And the June CPI report, of course, was welcome, but it's only one report, 1 month's data. We hope that inflation will follow a lower path it will be consistent with the CPI reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture, and starting with we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance. Including in particular in the labor market. We'll be looking at inflation, and we'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that conclusion, then we will go ahead and raise rates. So that's how we're thinking about the next meeting, and how we're thinking about meetings going forward potentially. But we're now mainly thinking about the next meeting. I will also say, since we're talking about it, between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report coming later this week, which is Employment Compensation Index, and lots of data on economic activity. All of that information is going to inform our decision as we go into that meeting. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate now by 525 basis points since March 2022. Monetary policy, we believe, is restrictive and is putting downward pressure on economic activity and inflation.
If I could just briefly follow up on something you said there. You said the data in the intermediate period, it broadly came in line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
I'm just going to go back to what I said. That's the question. We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that and making that assessment then. And it really, we did have the one good reading, and of course we welcome that, but it's just one reading, as everybody knows. And we've seen this before in the data. Many forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Gina. Thank you. Thanks for taking our questions, Chair Powell. Obviously, you upgraded the language around growth in the statement today. We've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer. It seems like the American consumer is in pretty good shape. And it does seem like growth is sort of picking back up a little bit, or at least doing well. And I wonder, from your perspective, if that continues, if we see growth not just stabilizing, but performing well this summer, is that a problem because it's inflationary, or is it good news because it suggests that a soft landing is more likely? Just how are you thinking about that sort of trajectory?
Yeah, so I would say it this way. The overall resilience of the economy, the fact that we've been able to achieve disinflation so far without any meaningful negative impact on the labor market, the strength of the economy, overall, that's a good thing. It's good to see that, of course. It's also, you see consumer confidence coming up and things like that. That will support activity going forward. But you're right, though. At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
Neil.
Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier, in the intermeeting period, soft CPI, jobs reports, still strong but moderating, JOLTS looked good. So if you're data dependent, why not pause again? Why not stay on hold? Why not take another meeting off when the data was at least cutting in the direction you want to see?
So if you go back to what we're trying to do here. We're trying to achieve a stance of policy that's sufficiently restrictive to bring inflation down to 2%. At the last meeting, we wrote down our individual estimates of what that would take, and the median of that was an additional 2 rate hikes. So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations, and as a result, we went ahead and took another step. And that's, a labor market that continues to be strong, but gradually slowing. I mentioned that the inflation report was actually a little better than expected, but, we're going to be careful about taking too much signal from a single reading. And, growth came in stronger than expected. So that's how we look at it, and so we did take that step today.
Nick Timmeros of the Wall Street Journal. Chair Powell, markets widely believe the median FOMC participants' inflation forecast from June for the fourth quarter of this year will be too high, given autos and shelter, and that by September that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below-trend growth and decelerating labor income growth to be convinced that you've done enough?
So it's hard to pick the pieces apart and say, how much of this and how much of that. We'll be looking at everything. And, of course, we'll be looking to see whether the signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality of the data, I think, but with a particular focus on making progress on inflation.
If I could follow up, last month you said there were benefits to moderating the pace of increases because it would give you more information to make decisions. Would another CPI report like the one we just had in June allow you to at least maintain that slower pace and defer until the fall any decision on whether you need that second rate hike?
So I'm just going to tell you again what we're going to do in September. We're going to look at 2 additional job reports, 2 additional CPI reports, lots of activity data. And that's what we're going to look at, and we're going to make that decision then. And that decision could mean another hike in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is the overall signal one that we need to do more, that we need to tighten further? And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't, then we'll have the option of maintaining policy at that level. But it's really dependent so much on the data, and we just don't have it yet.
Chris.
Hi, Chris Rugaber at Associated Press. So consumer confidence in the economy is rising, likely in large part because of the declines in headline inflation. You also see wages are also rising faster than prices now, after trailing them for a long time. How much are Americans truly harmed by inflation at its current level, headline level of 3%? And with that in mind, when do you put some weight back on the employment side of the dual mandate?
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's really what the public experiences. And I would say that having headline inflation move down that much almost creates it will strengthen the broad sense that the public has that inflation is coming down, which will in turn, we hope, help inflation continue to move down. So you were really, sorry, what your question was?
Well, I mean, you've talked for many press conferences now about the harm created by inflation, how hard it is for people. So how much of that are we still seeing with inflation now down at 3?
So I guess I would put it this way. I'd say it this way. It's really a question of how do you balance the 2 risks, the risk of doing too much or doing too little. And, I would say that, we're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not, but as our stances become more restrictive and inflation moderates, we do increasingly face that risk. But we need to see that inflation is durably down that far. As you know, we think, and most economists think, that core inflation is actually a better signal of where headline inflation is going, because headline inflation is affected greatly by volatile energy and food prices. So we would want core inflation to be coming down, because that's what we think core is signaling where headline is going to go in the future. And core inflation is still pretty elevated. You know, there's reason to think it can come down now, but it's still quite elevated. And so we think we need to stay on task, and we think we're going to need to certainly hold policy at a restricted levels for some time, and we need to be prepared to raise further if we think that's appropriate.
Well, and then if inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment do you think is acceptable to get that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So, but how much unemployment do you think is justified to get down that last?
So it is a very positive thing that actually the unemployment rate is the same as it was when we lifted off in March of 22 at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation. And we don't seek to, it's not that we're aiming to raise unemployment, but I would just say the historical record, we have to be honest about the historical record, which does suggest that when central banks go in and slow the economy to bring down inflation, the result tends to be some softening in labor market conditions. And so that is still the likely outcome here. And, you know, we hope that that's as little as possible. We have to be honest that is the likely outcome. The worst outcome for everyone, of course, would be not to deal with inflation now, not get it done. Whatever the short-term social costs of getting inflation under control, the longer-term social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity, and you know that's the thing we really need to avoid and will avoid.
Go to Michael McKee.
At this point, you say the policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the downside, and inflation lately to the downside. So I'm wondering, by definition, should you be restrictive enough right now under these conditions? Do you think you might need to do more? Because I'm curious about what you see as inflation dynamics now. Is the economy still moving in a direction where it creates more inflation? People talk about base effects and higher energy costs, and now we have some large labor settlements. Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say, again, the broader picture of what we want to see is we want to see easing of supply constraints and normalization of pandemic-related distortions to demand and supply. We want to see economic growth running at moderate or modest levels to help ease inflationary pressures. We want to see continued restoration of supply and demand balance, particularly in the labor market, and all of that should lead to declining inflationary pressures. Now, what we see is those pieces of the puzzle coming together, and we're seeing evidence of those things now. But I would say that what our eyes are telling us is that policy has not been restrictive enough for long enough to have its full desired effects. So we intend, again, to keep policy restrictive until we're confident that inflation is coming down sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
Well, do you think under current conditions you are restrictive enough unless something changes?
Well, I think we think today's rate hike was appropriate, and I think we're going to be looking at the incoming data to inform our decision at the next meeting about is the incoming data telling us that we need to do more, and if it does tell us that collectively, if that's our view, then we will do more.
Colby.
Thank you. Colby Smith with the Financial Times. If September is in fact a live meeting, how does that square with the need for a more gradual tightening pace that you spoke of last month in explaining the rationale for holding the funds rate steady at the June meeting?
So a more gradual pace doesn't go immediately to every other meeting. It could be 2 out of 3 meetings, right? It just means if you're slowing down. The point really was to slow down the decision cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think that's, I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions. And so that's what we did. And so I think it's possible, I mentioned before, it's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
So we shouldn't assume that every other meeting is the lowest tightening frequency, let's say. It could be, longer intervals in between as well.
I think we're going to look. I think we're going to make a decision about the next meeting, and then we're going to make a decision about the one after that. And I think it'll sort itself out.
Thanks. Howard Schneider with Reuters. Among your colleagues, there have been people who've said they feel that very little transmission has taken place so far from monetary policy into the economy, and there are those who feel, they say, it's happened very fast this time and it's kind of up to date. Where are you on that continuum?
So there's a long-running debate about the lags between changes in financial conditions and the response to those changes from economic activity and inflation, right? So we know that in the modern era, financial conditions move in anticipation of our decisions, and that has clearly been the case in this cycle. So in a sense, the clock starts earlier than it used to, but that doesn't necessarily change the process from that point on, and it's not clear that it has. I'll tell you what we know and then what we don't know. We know that financial conditions affect economic activity and inflation with a lag that can be long and variable, or lags, plural, that can be long and variable. A lot of uncertainty around the length of the lags, and by the way, that's just one component of the broader uncertainty that we face. So I'll tell you how I think about this. The first thing to say is we're determined to bring inflation down to 2% over time, and we will use our tools to do that. No one should doubt that. I would look at it this way, though. The real federal funds rate is now in meaningfully positive territory. If you take the nominal federal funds rate, subtract a mainstream estimate of near-term inflation expectations, you get a real federal funds rate that is well above most estimates of the longer-term neutral rate. So I would say monetary policy is restrictive, more so after today's decision, meaning that it is putting downward pressure on economic activity and inflation. We'll keep monetary policy restrictive until we think it's not appropriate to do so. So that's how I think about it. I mean, if I sum it up, I would say we've come a long way. We are resolutely committed to returning inflation to our 2% goal over time. Inflation has repeatedly proved stronger than we and other forecasters have expected. And at some point that may change. We have to be ready to follow the data, and given how far we've come, we can afford to be a little patient as well as resolute as we let this unfold.
On the credit side, I'm wondering if you saw anything in the latest SLOOS data that made you think you're getting a quantum of credit contraction beyond what you'd expect. The bank lending data really is, the growth rates edging down towards and heading below zero, which is usually a recession indicator.
So I guess the SLOOS will come out early next week, and I would just say it's broadly consistent with what you would expect. You've got lending conditions tight and getting a little tighter. You've got weak demand, and it gives a picture of pretty tight credit conditions in the economy. I think it's really hard to tease out how much of that is from this source or that source, but I think what matters is the overall picture is of tight and tightening lending conditions, and that's what this SLOOS will say.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. Could you break down the reasons why inflation has fallen and what share of that credit you would give to factors that don't stem directly from rate hikes or that might be within your control at all, like easing supply chains and a drop in energy prices over the past year?
Yeah. So, interesting question. So, let me start by saying that the inflation surge that we saw in the pandemic resulted from a collision of elevated demand and constrained supply, both of which followed from the unprecedented features of the pandemic and the response from fiscal and monetary policy. And we've always expected that the disinflationary process would stem from both from the normalization of those broad pandemic-related supply and demand conditions and from restrictive monetary policy, which would help return the balance between supply and demand by restraining demand. And we think that's broadly what we're seeing. So to go break it down a little further, of course, headline inflation has come down sharply from elevated levels as energy and food prices have come down, mostly due to reversal of the effects from the war in Ukraine. And that's a good thing, and the public experiences that, as I mentioned earlier. For core inflation, I'd say there has been a role for both factors, both that I mentioned. Clearly, for goods, normalization of supply conditions is playing an important role, as is the beginning of the reversal of spending back into services and away from goods. And take autos as an example. The combination of an increase in sales and inventories, while vehicle inflation has decelerated, points to a substantial role for supply. But there's also a role for demand, as the loans and things like that are more expensive. So they're both working there. Housing services inflation now starts to move down. Clearly, higher rates have slowed the housing market. I would say monetary policy is working about as we expect, and we think it'll play an important role going forward, in particular in non-housing services, where really we think that's where the labor market will come in as a very, very important factor. So we think both of those sources of disinflation are playing an important role.
I see. And just to follow up, do you think that of those two sources, that core will rely more heavily on seeing an impact from rate hikes, or is there a more even split there too?
I think monetary policy is going to be important going forward, because we're sort of reaping now the benefits of the reversal of some of the very specific pandemic things. We're seeing that with goods in particular, with supply chains and shortages moving, and we're seeing. So I think going forward, monetary policy will be important, particularly in the sector, in the non-housing services sector.
Edward. Thank you, Chair Powell. First, let me compliment your tie, the choice of tie. So thanks for taking our question. So the Beige Book, it said, input cost pressures remain elevated for services firms, but eased notably for manufacturing sector. Is that an indication that there's a wage inflation pressure? And how do you target and pressure on the wage inflation without pushing the economy into recession?
Well, I think as it relates to goods, it's really an indication that supply chains and shortages are easing. And so what was the first part of it?
So wage inflation, like how do you target wage inflation without pushing an economy into a recession?
I don't think we're targeting wage inflation. I think what we're looking for is a broad cooling in labor market conditions, and that's what we're seeing. So wages have actually been gradually moving down. They're still at levels that would be consistent over a long period of time with 2% inflation. Nonetheless, we're making progress there. And by so many indicators, labor market demand is cooling. You can look at surveys by workers and businesses who see that. You can look at the quits rate normalizing. You can look at job openings coming down. You can look at just job creation in the establishment survey has, it's still at a high level, but it was at really an extraordinarily high level for most of the last 2 years. So you see cooling, particularly in private sector in the last, in the last report. So I think we see that, and it's happening at a gradual pace. So that's actually not a bad thing in a sense, because if what we see is a labor market, very strong demand for labor, which is really the engine of the economy. People are getting hired, many people going back to work, getting wages, spending money, and that's really what's driving the economy. But that it's gradually slowing, it's gradually cooling. That's a good prescription for getting where we want to get.
But still, we see a push to raise minimum wage. We're seeing a lot of unions go on strike or threaten strike, and the common thing is they come out with agreements like big pay increases, like UPS, and we have the auto workers coming up. Are you concerned then about a trend of series of big unions, these contract pushing wage inflation then?
Not for us to comment on contract negotiations. Not our job, not our role. We monitor these things, and we'll keep an eye on them. But really, that's something that's handled at that level. And not
a large amount.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask about the SEP, which suggests that you would cut rates as overall and core PCE get to around or under 3%. And so I'm wondering, is the level of inflation what's sort of important there as you think about getting to 2% and when you might start cutting rates, or is the speed at which inflation is falling also important?
I think you'd take both into account. I think you'd take everything into account when you start cutting rates. It would depend on the whole, on a wide range of things. And when people are writing down rate cuts next year, you know, it just is a sense that inflation is coming down and we're comfortable that it's coming down and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens, you know, in the next meeting cycle, let alone the next year, let alone the year after that. So it's hard to say exactly what happens there, what's motivating people.
So if it's sort of stubbornly in maybe the high twos, you wouldn't necessarily cut rates?
I'm not saying that at all. I'm not giving you any numerical guidance around that. I'm saying we'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. It would be, but you know, many people wrote down rate cuts for next year. I think the median was several for next year, and that's just going to be a judgment that we have to make then, a full year from now, and it'll be about how confident we are that inflation is in fact coming down to our 2% goal.
A good part of Wall Street has become more confident that the Fed is going to be able to engineer a soft landing, and they've reduced their forecast for a recession. And I'm wondering if the staff has changed its view on the likelihood of a recession being likely, and if you personally have changed your view in terms of becoming more confident that you can achieve a soft landing.
So it has been my view consistently that we do have a shot, and my base case is that we will be able to achieve inflation moving back down to our target without the kind of really significant downturn that results in high levels of job losses that we've seen in some past instances, many past instances of tightening that look like ours. That's been my view. That's still my view. And I think, you know, that's sort of consistent with what I see today. So, but it's a long way from assured, and you know, we have a lot left to go to see that happen. So the staff now has a noticeable slowdown in growth starting later this year in the forecast, but given the resilience of the economy recently, they are no longer forecasting a recession. I just want to note that that our staff produces its own forecast, which is independent of the forecast that we, as FOMC participants, produce. Having an independent staff forecast, as well as the individual participant forecast, is really a strength of our process. There's just a lot of, I think, constructive diversity of opinion that helps us make, informs our deliberations, helps us make, I hope, better decisions.
And is the reason for optimism that inflation has come down and you still have a strong labor market? I mean, does that add to the optimism?
I wouldn't use the term optimism about this yet. I would say, though, that there's a pathway. And yes, that's a good way to think about it. We've seen so far the beginnings of disinflation without any real costs in the labor market. And that's a really good thing. I would just also say the historical record suggests that there's very likely to be some softening in labor market conditions. And consistent with having a soft landing, you would have some softening in labor market conditions. And that's still likely as we go forward with this process. But it's a good thing to date that we haven't really seen that. We've seen softening through not through unemployment, not through higher unemployment. We've seen softening through job openings coming down part of the way back to more normal levels. The quits rate, so people are not quitting as much. We've seen participation, people coming in, and so labor supply has improved, which has lowered the temperature in the labor market, which was quite overheated, going back a year or so. So we're seeing that kind of cooling, and that's very healthy, and we hope it continues.
Thank you, Mr. Chairman. Jeff Cox from CNBC.com. You and other Fed officials in the past have suggested that you don't need to keep hiking until inflation hits 2%, that as long as you see continued progress. So I'm wondering, how close do you need to get with the inflation numbers coming down? How many months of data do you need to see that will give you sufficient confidence? And how far does this fight need to go before you're willing to kind of declare victory on it?
So the idea that we would keep hiking until inflation gets to 2%, it would be a prescription of going way past the target. That's clearly not the appropriate way to think about it. So, in effect, if you look at our forecasts, the median participant, and again, these are forecasting out years, so take them with a grain of salt, but people are cutting rates next year because the federal funds rate is at a restrictive level now. So if we see inflation coming down credibly, sustainably, then we don't need to be at a restrictive level anymore. We can move back to a neutral level, and then below a neutral level at a certain point. I think we of course would be very careful about that. We'd really want to be sure that inflation is coming down in a sustainable level. And it's hard to make. I'm not going to try to make a numerical assessment of when and where that would be, but that's the way I would think about it. Is you'd stop raising long before you got to 2% inflation, and you'd start cutting before you got to 2% inflation too, because we don't see ourselves getting to 2% inflation until all the way back to 2 until 2025 or so. So.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. It's been over 4 months since a handful of regional banks, including Silicon Valley Bank, failed. When you look at credit conditions now, given Banc of California's acquisition of PacWest, does this acquisition suggest the full impact has not been felt, or are you comfortable saying that we've seen most of the ripple effects that may have occurred at this point, and how does this play into your outlook for policy?
So I don't want to comment on any particular merger proposal, but I will say things have settled down for sure out there. Deposit flows have stabilized. Capital and liquidity remain strong. Aggregate bank lending was stable quarter over quarter and is up significantly year over year. Banking sector profits generally are coming in strong this quarter, and overall the banking system remains strong and resilient. Of course, we're still watching the situation carefully and monitoring conditions in the banking sector. In terms of the actual effect on, if you think of a particular set of banks that were affected because of their size and business model and things like that, that were more affected by the turmoil in March than others, it's very hard, as I mentioned, it's very hard to sort of tease out the effects on this very large economy of ours from them tightening. They may be tightening a little bit more, probably are, than other banks. The SLOOS has been telling us for more than a year that banking conditions are tightening. That process is ongoing, and that will restrain economic growth. So I think we have to take a step back from. I can't separate those anymore. I think basically we're just looking at the overall picture, which is one of tightening credit conditions, and that's going to restrain economic activity. It is a restraining economic activity. So that's how I would look at it.
And how is that informing your outlook for setting policy?
So I think that is an expected result of tightening interest rate policy, is that bank lending conditions would tighten as well. And so the question is it more effective this time because of what happened in May? I just don't think we know that. I think we're looking at the current data in GDP, and we're seeing strong spending. We're seeing a strong economy, and it's made us confident that we can go ahead and raise interest rates now for the third time since the March events. It seems like the economy is weathering this well, but of course we're watching it carefully and expect to continue to do that.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I wondered on wages if you were at all concerned about any inflationary impact of wages now outpacing inflation, which is likely contributing to the boost in consumer sentiment and the continued strength of the consumer that we've been seeing.
Well, wages in excess of inflation means real wages are positive. Again, that's a great thing. Of course, we want that. We want people to have real wages, but we want wages to be going up at a level that's consistent with 2% inflation over time. As I mentioned, nominal wages have been coming down gradually, and that's what we want to see. We expect to see more of that. That's just more of what's consistent over a longer period of time. We don't really think that wages were an important cause of inflation in the first year or so of the outbreak, but I would say that wages are probably an important issue going forward. Labor market conditions broadly are going to be an important part of getting inflation back down, and that's why we think we need some further softening in labor market conditions.
This goes sort of to the balance of risks question, but you mentioned at the start how you're keeping an eye on consumer activity and whether there might be some sort of a rebound there. And I'm curious what the Fed's explanation would be to families if further interest rate hikes start to hit the labor market, start to drive that sentiment back down. What's the message there of why you continue to keep rates elevated or to raise them?
Well, we have a job assigned to us by Congress to get inflation under control. And we think the single most important thing we can do to benefit those very families, especially families at the lower end of the income spectrum, is to get inflation sustainably under control and restore price stability. We think that is the most important thing we can do now, and we're determined to do that. And I would just point out that the people who are the most hurt by inflation right away are people who are on a low fixed income, who, when you're talking about travel or transportation costs, heating costs, clothing, food, things like that, if you're just making it through each month on your paycheck and prices go up, you're in trouble right away. Even middle-class people have some resources and can absorb inflation. People in the lower end of the income spectrum have a harder time doing that. So we need to get this done, and the record is clear that if we take too long or if we don't succeed, that the pain will only be greater. So that's how I would explain what we're doing.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You had said last month that this meeting this week was going to be a live one. In the event the market had assigned a roughly 99% probability to the rate move that you announced today, the decision was, of course, unanimous, and the statement was basically unchanged from last month. So may I ask, to what extent was the meeting actually a live one? Was there ever any doubt over the past 2 days about what the decision was actually going to be?
Well, was there doubt? Look, I would say there's a range of views on the committee, and when you see the minutes in 3 weeks, you'll see that. There's a range of views about what we should do at this meeting and what we should do at the next meeting, and it's a process that we go through. Many times when we go into a meeting, the decision is not, fundamentally in doubt. Nonetheless, we have the meeting, and some meetings are less uncertain than others, and I'll just leave it at that.
Evan Reiser, Market News International. Thank you, Chair Powell. Financial conditions have been loosening at a fairly steady clip in recent weeks, the dollar, the stock market, et cetera. What does that mean for the Fed in being sure that inflation will come down to target?
So we monitor, of course, financial conditions, broad financial conditions. You're right, it's the dollar and equities, and we're of course very focused on rates and our own policy. We're going to use our policy tools to working through financial conditions to get inflation under control. The implication is, we will do what it takes to get inflation down, and in principle, that could mean that if financial conditions get looser, we have to do more. But what tends to happen, though, is financial conditions get in and out of alignment with what we're doing, and ultimately, over time, we get where we need to go.
If I could also ask about the SEP from June that showed rate cuts. Do you expect the Fed to cut nominal rates next year while also continuing QT?
So that could happen. The question is, is that consistent with? So if you think about both of them as normalization, imagine it's a world where things are okay, and it's time to bring rates down from what are restrictive levels to more normal levels. Normalization in the case of the balance sheet would be to reduce QT. So to continue it, you depending on where you are in the cycle. So they're two independent things, and really the active tool of monetary policy is rates. But you can imagine circumstances in which it would be appropriate to have them working in what might be seen to be just different ways, but that wouldn't be the case.
Let's go to Kyle.
Thanks, Chair Powell. Kyle Campbell with American Banker. I have a question about the discount window. I'm wondering if since the bank failures of the spring, if you've seen signs that banks have taken more steps to be proactive in assuring that they're ready to use that facility if they need to. And if you have any sort of thoughts on whether policies might be appropriate for making sure that banks sort of test regularly to show that they are prepared to use it. Thanks.
So that's a very important thing, yes, and yes to both sides of that. Yes, banks are now working to see that they are ready to use the discount window, and we are strongly encouraging them to do that, banks broadly. We did find, as you know, during the events of March, and that that it's a little clunkier. It can be a little clunkier and not as quick as it needs to be sometimes. So why not be in a situation where you're just much more ready in case you need to access the discount window?
Let's go to Mark Hamrick.
Mr. Chairman, Mark Hamrick with Bankrate. You've talked in the past about getting the housing market back into better balance, excuse me, and also that the market might have bottomed. Where do you see that situation and balance, or lack thereof, right now, particularly with the constrained inventory of existing homes that might otherwise be coming onto market at a time when existing homeowners are reluctant to move? And of course, all of that happening with the 30-year fixed-rate mortgage still around 7% on the heels of Fed tightening, and with what you're talking about, tightening industry lending standards. Are we getting closer to balance or farther away? What's your sense?
I think we've got a ways to go to get back to balance, really for the reasons that you talked about. With existing homes, there are many people who have low-rate mortgages, and whereas they might want to sell in a normal situation, they're not going to because they have so much value in their mortgage, which means that supply of existing homes is really, really tight, which is keeping prices up. On the other hand, there's a lot of supply coming online now. And there are people coming in. A lot of the buyers are first-time buyers coming in, buying it with these relatively elevated mortgage rates. But I think this will take some time to work through. Hopefully, more supply comes online, and we work through it. We're still living through the the aftermath of the pandemic.
We'll go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Russia has pulled out of an agreement allowing shipments of grain, safe passage through the Black Sea, and alternative routes at this point could be closed off. Just wondering, how could that contribute to higher food prices and inflation generally, and how closely are you watching that?
We are watching it, of course, very closely. And you're right, the withdrawal from the Black Sea Grain Initiative does raise concerns about global food security, particularly for poorer countries that import a large share of their food. Grain prices did go up on this news, but they remain well below their peaks of last spring. And the moves that we've seen so far, I would say, are not expected to make a significant contribution to U.S. inflation. Of course, we will be watching that situation carefully.
So you don't think it would have a big effect on Fed policy at this point?
You wouldn't say so, looking at what we know now.
Thank you.
Thanks very much.
That's a man who wants to get out of the room. Live from New York City this afternoon. Good afternoon. That was Chairman Powell.
So there we go. What do you think of that? What a Fed Jerome Powell meeting that was. Very, very different attitude today. You may have noticed the tone was different, the expression was different, the actual presentation was a lot shorter than normal. The questions were just as long. In fact, I think we made up for it with the questions, but nevertheless, things. Not a great deal of surprises, really. I noticed Mike was not very happy. He was saying some comments. He wasn't very happy, but nevertheless, Let me just unmute that. There we go. Just wanted to unmute that scene there, and back with you again now. So NEE, I heard you mentioned during that you mentioned the law case. I'm not concerned about that. They explained that in the earnings. I'm happy to buy more. This is a typical reaction. We're overselling solar again. We had the same thing with Enphase recently, the best balance sheet on the stock market. I just look for the opportunity when all others are buying, I'm selling, and when they're selling, I'm buying. We did see a bit of a sell-off, but we're now seeing, now the meeting's over, we're seeing it start to go up again. Virgin Galactic, surprisingly enough, didn't actually sell off. They did for a moment and then back up again. I'm surprised by that, but doesn't really invite me in. I've got to be honest, I'm not excited to buy. Going up 19 cents in a day when you're down 90%, it's not really a reason to buy in. Of course, those certain people will be very excited about that. They'll think it's great, but I don't see that is a big deal at all. But anyway, there we go. Welcome our NUM members. We just opened it up for a few moments for the NUM members just to pop in and say hello. We do now go, most of our events now are members only, so we can answer everyone's questions, keep the trolls out, and share and answer everyone's questions. So just for the moment, we're going to be open for NUM members, just give you a chance, but we will shut it down in a second. So we're just giving our NUM members the opportunity to come in and say hello. But we will go back members again in just a few seconds because we want to focus on our members. It's only a couple of bucks a month to be a member, of course, and you get 20 times back what you put in. Let me just quickly run down. Scott B has said, did they raise the rate? I just got off work. Yes, 0.25 was the rate. 0.25, yep. Everything else was as good as normal. It was as normal. Raman says Rocket Lab USA down like a broken racket, says Rocket Lab. Well, they've just put back the flight by 2 days. That's a typical overreaction. It's not low enough for me to buy. I did buy NEE on the way down though, kept buying it, so I've doubled my position. Not quite, but anyway, I've been buying it on the way down. Happy to do that. For the ex-dividend date alone, it'll pay for itself. Disappointing. I have hope for a good sell-off Friday to disperse my cash. Craig was hoping for a big sell-off today. It didn't happen, did it? Bought extra NEE and Hood Mine. Happy days. I think so. I think this is an opportunity to buy more. Robin Hood doing very well now at 12.71. I'm up 47% on my Robin Hood. And I'm up 44% on my Roth IRA, $1,000 up on Robinhood. Fantastic. They'll love all this because they will offer some more interest rates benefits to its members. I will earn more on my uninvested cash, but of course Robinhood make money on it too. They don't give away everything they get, right? Say hello and join quickly. Great family here. Yeah, we're about to go back to members only because I want to focus on the members. But I see NEE quickly recovering from that. I think people will see the opportunity. I'm surprised that SPC is running. No reason why it would. We'll see how it continues. The S&P popped up, sold off, and now coming back up again. Amazon coming back up. Apple coming back up. NEE is just going sideways now. I'm not really buying anymore. I've bought enough. I've lowered my averages all the way down now. Don't need to buy anymore. Yep, it's starting to come up. On my Roth IRA, I'm 57.4. Let's have a quick look. We did get an all-time high. We went through 57.8, just sold off a little bit, but we will hit probably 60,000 quite possibly this week now. I don't think we're going to get a sell-off Friday. We shall see. Hello, non-member here. Tuna Sub, how are you? Hello there from Russia. Lovely to have you here. Ravel, lovely to have you here. Welcome, welcome, welcome. Welcome to all our guests this afternoon. Lovely to have you here. We want to just put a quick shout out to our non-members this afternoon. Virgin Galactic, gold up 183, bit expensive. S&P is now coming up. Let's have a quick look at my position. As you can see, I'm in the red. The S&P is in blue. I'm beating the market still. And you can see very, very much on my Roth IRA. That's because of Tesla. 457.5, it's going back up again. I wouldn't be surprised if we see a quick rally on my position with NEE. I think that got over. That was the overreaction for me. Amazon's going back up. Apple's going back up. NEE's come back up again. Nice. Was able to buy a nice discount today, down nearly 2% today. No reason for that. Enphase also going back up. Coca-Cola going up. J&J trying to go back up again. CVX going back up. Tesla going back up. Rivian's going back up, McDonald's going back up, Google going sideways. I didn't buy Google today. I sold it at a 50% profit. There was no opportunity to buy Google today. It's very expensive, as is Microsoft. They didn't sell off. They didn't go up. There's nothing in them right now. No point buying it. I'm up 50%. There's no growth left in it at the moment. Walmart, nothing there. Tesco, not in it at the moment. Waiting for the site. Secular, it goes up and down. When it goes back to 7, I'll buy it again. Tilray, we can see Tilray did well today. It didn't sell off as predicted. Robinhood, because of the rates, gone up. Think of it as a digital bank. They will love this. This is great for them, great for the shareholders, and great for me. Very, very happy with that. IonQ, great. With Amazon, of course. Rocket Lab, opportunity to buy more. Just not doing it yet. I'm still researching Plug. Procter & Gamble defensives going sideways. Rumble going up. 6% to go and I'll be out. Fun, not really anything in it. Faraday, not really in it at the moment, really. Rio Tinto, still expensive. Meta, too expensive. Bitcoin, just doing nothing. Polygon, I bought from 38. XRP, I bought 53 and 70. So, not too bad. All right. There we go. NVIDIA. We're not looking at NVIDIA today. We can do reviews for our members, but we have to focus on our members. Martyn, how are you, brother? I'm very well indeed. Very well. Lovely to have you here. And yeah, good. We've got a wonderful day. I'm very, very happy. My portfolio is doing well. Overall, I'm up. Virgin Galactic is still going up. No reason why I'm not buying it. This could be a very, very quick pump and then dump. I'm not touching it right now. Good luck to those of you that are. I want to see it do it well, but it's just not a good investment for me. Jojo S. I think you are holding Rolls Royce in your Roth. Went up nice this week. I was holding it. I'm not anymore. I sold it and I'm out of it now. But anyway. Oh, whoa! Craig Gios has just become a gold member, our second highest membership. Fantastic. Craig Gios, where are you from? What country are you from? Craig Gios, let me welcome you to the family. And that's an amazing thing. You've got many, many perks. Let me stop a moment and give you all your perks. Our latest gold member. We have 12 gold members now, and this is fantastic. So let me give you all your perks. But first of all, I'd like to celebrate with our brand new member. Here we go. Great news. A gold member. Fantastic. You get lots of benefits as a gold member. Wonderful stuff. Wow, absolutely fantastic. Gold member. Thank you very much indeed. So, Craig Gios, we have members in 30, how many countries now? 37 countries. We added France today. What country are you in? And as a gold member, first of all, you'll be recognized as a gold member because you have a badge which will eventually turn yellow and gold. It's blue right now. You can ask me a question and I will always answer. You can Santa USA, Kuragos, Courageous. Oh, courageous. I got it. Courageous. Thank you very much indeed. I'm from the Cornwall, United Kingdom, but my studio is here in Dallas, Texas. Now, as well as having a membership and being recognized, you will be able now to see all of the exclusive content only available to members. Let me show you where that is. Here on the homepage of the channel, you'll see all the membership only videos here on the homepage. Not only that, There are members-only events, members-only parties. Every Friday night, we have a concert in my studio. You'll be able to have a request and pick your favorite songs. If you want to ask a poll to the audience, I will poll the audience a question. If you reply to any of my videos on YouTube, I will reply back to you. If you comment on any of my social media, I will reply back to you and help you grow. Now, also, not only that, Courageous, if you want to buy anything from my shop, you will get a discount from all of my items in the shop. Not only that, you can have a 20-minute fundraiser. You have a 20-minute fundraiser. So if you want, when we get to 10,000 subscribers, we've been doing it for the longest time, raising money for charity. But now, as a gold member, when we get to 10,000 subscribers, and we're nearly there, look, 9,617, we can do a fundraiser concert for you for your favorite registered charity, and they will get all of the money. It's completely free. I give it to you for free. There's no fees, and all the money we raise during the concert will go directly to your charity. That's what you get as a gold member. Also, as a gold member, you get 2 1-hour one-on-one video calls a month with me. If you want to learn how to promote your YouTube channel, if you want anything like that, or build a studio like me, I will help you do it. Also, as a gold member, you go right to the top here. If you are a YouTuber and you want me to put you on the YouTube channel, you can go here, and I will put your YouTube channel here and get everyone to subscribe to you, and they will all subscribe to you. That's another thing that you can have. There are many, many perks that you get as a gold member. But the biggest thank you, and all the members will thank you, is these shows, why I go live 10 hours a day, that they're all provided by the members. If I wanted to grow a YouTube channel just to make money and sell videos, I would just make videos with a couple of half-an-hour live shows. I go live up to 10 hours a day because of the members are the ones that support it and make it all possible. All right, so there you go, many perks. Another perk you get is, as a gold member, full access to Discord. You can call in, being live on the show. You can be one of my research team. You can share links to the show. You can be a contributor to the show. There is your Discord link in the chat. And what you do is you go over to Discord and go into the welcome all. This is the welcome all screen here. You can then leave a hello in the welcome all page. That's just here. You will appear here, and I will upgrade your account. You can then call in to the show, be live on the show, ask me a question, ask the members a question. You can talk to all of my team off air when we're not streaming, and you can be part of that. Also, when our 24-hour stream starts very shortly, it runs 24 hours a day on YouTube, live stream. You'll be able to be in and talk to all our team live, one-on-one with all of that. So many, many perks that you get as a gold member. But the biggest thank you is from me, because you are supporting the live shows and making all of this possible. So many, many perks. The purpose of the membership isn't to make me rich. It's to help people and support people. I am not a YouTuber. I know that confuses some people, but for those of you who don't know, just for Courageous, I just want to just say, you can see here, I was actually voted as the World Piano Man. This is my music channel, and I've got videos here of when I performed as the Phantom of the Opera here. I also did my own Vegas Showgirl show all over the world. This is my show here with the British Philharmonic Orchestra. This is me wearing Sir Elton John's jacket he wore in Candle in the Wind doing Lion King. This is who I am. I'm an entertainer, and I just use YouTube TV to broadcast. A YouTuber is someone who makes videos to sell videos. I don't do that. I build an audience. I'm an entertainer who broadcasts in a TV studio, as you can see here, to bring you the best, most live, real place. And the idea is we go live every day. We support people through sorrow. We've had people pass away on my show. We've people get ill in hospital with COVID. We've had people give birth, bring a new child into the world on my show. With people get margin called, get rich, lose all their money. We are here to support people, always positive, always live, always real, And that's what you've become. You become a member of this family. And there are members in 37 countries. And we officially have the highest engagement rate of any channel on YouTube. 95% of our members, of our live viewers, are members. So thank you for all of that. When you do get into Discord, it will take 10 minutes. So if you want to go there now, I will upgrade you live on the show, and I will put you into the show, into Discord, and upgrade you. Anyway, there you go. Welcome to our family, and thank you sincerely for your support. And talking of members, we gave an opportunity for the non-members to have a chat and be part of it, but we now need to go back to our members again. We do focus, of course, on our members because it's the members that make this whole channel exist. So we're going back now to... Oh!
Craig has become a member. Martyn Lucas has the best show on YouTube television. _subscribe.
Thank you very much indeed. That's very nice of you, Craig. 11 months now. You will have your gold badge any day now. And Craig is a silver member, has been for a while as well. 11 months, in fact. Let me go back over to our members only. Here we go. Wonderful stuff. Thoughts on the Amazon lawsuit? I don't know anything about that, if I'm honest, Caden. I don't know anything about that situation, so I can't honestly tell you. You got in just there, just as we went to members only, so you were very lucky there. But no, I honestly don't know. I honestly don't know. We talked about that a few moments ago. Mike mentioned NEE with a lawsuit. Big companies are always being sued. It's part of the course. Not saying it's a good thing, but I'm just saying it's part of the course. Big companies are always getting sued. Anyway, but I don't honestly know anything else about that. Space, I'm out totally. Yeah, I'm out at the moment. Virgin Galactic, I don't see it going up much longer. Welcome, Courageous. Where are you from? I'm from Florida. Wow, a gold member. Great family here. California. Cadence asked me about Amazon. We did that. I missed a comment here from Randy B. Do you all think that Tesla would be worth it? Oh, that's not Tesla, is it? That's AT&T. Would be worth it. No, I don't. I think no, I don't. The dividends do not outweigh the lack of growth. No, I won't touch AT&T. I don't think it's got any reason to own it at all. It's not for me. Anyway, Apple. And remember, if you're looking at that, Randy B, you need to look at the dividend payouts. Has it always paid out? Because there's no point promising great dividends and then you don't pay out regularly. It's pointless. It's a good advert to get you to buy the stock. It doesn't help at all. And if they keep going down in value and people keep selling and the shares keep going down, they won't be able to pay the dividend. So the reason why you're in won't exist either. So just be very, very careful if you're buying a stock promising you great dividends. A lot of people on this channel actually do try to get me to promote stocks like that, which don't have any benefit to you at all. So we don't focus on those sort of stocks. Anyway, Google going sideways all day, nothing there. Thanks for the warm welcome. You are very welcome. Now, Friday night is music night, Courageous. Let me give you my music channel. On Friday night, we have live music. And I do all my music for you in the studio. So I'll give you a little bit of a taster. Courageous, who do you like best out of Michael Jackson? In fact, which voice, Courageous, would you like to hear? Michael Jackson's, Paul McCartney, Andre Bocelli, Pavarotti, Cliff Richard, Louis Armstrong, Paul McCartney, Richard Marx. Which one of those voices would you like to hear live right now in my show to give you a little taster of what you can have on Friday night on our concert night? And by the way, Courageous, if you want to go on the homepage of my YouTube channel, you have to ask me and request it. I don't just put you on there automatically. You have to ask me if you want that. If you are a YouTuber, you may not be. But if you are and you want everyone to subscribe to your YouTube channel, then please do. Just ask me. Okay, now then. One other thing that you can have as well, Courageous, anyone can have this. We give away cash prizes as well. Here is my newsletter. All my links This is the links page. If you go here on the links page, you put your email in here. All you require is an email, but if you want it personalized, put your name and your date of birth, and you get a birthday card and a Christmas card. So Paul McCartney, okay, you've got it. And also you can have our text service as well. Sign up for that. It's all free, and members get extra benefits. You get Christmas cards and all sorts of stuff. But if you scroll down here, you will find all of my social media. Now, I have paid a lot of money, about $80 a month I pay to verify my Facebook, verify my Threads, verify my Instagram, verify my Twitter, because I want everyone to make sure they are following the right people. Many of you are following the wrong people, scammers and bots and stuff like that. So be very careful. There's all my links on the links page. I've just given it to you. You can subscribe to all of my social media plus our newsletter. It's there for you to protect you, okay? And I post my trades before I make them. And here is the Twitter, just to give you one. Now, Courageous, if you are you a Paul McCartney fan? I've got something you might actually like here. Let me just go through my positions a minute, just check. Yeah, NEE trying to break up again. Enphase, Coca-Cola, all doing good. Yeah, my portfolio is looking good. I'm very happy with my position today. So Paul McCartney, are you a Paul McCartney fan? Because if you are, I've got something you're going to like. This is for our gold member today who just come in. Let me have a look here. You'll like this if you are a Paul McCartney fan, Sir Paul McCartney fan. Just waiting for his reply. Once I get his reply, of course. All right, here he goes. Well, Wings, Howie Casey contacted me to perform with Wings when they toured the US. This is me rehearsing with Wings in Bournemouth in England. And there I am at the piano, look, rehearsing. Here is Wings. This bold head here, if you are a musician or a fan of Wings, you will know that's Howie Casey, a Wings saxophonist. And there I am rehearsing with Wings in Bournemouth. And there you go. And when the time is right, I might be performing as Sir Paul McCartney in the US. All right, there you go. I thought I'd share that with you. So on Friday night, I'll go to my piano behind me and do Sir Paul McCartney. I'll do Yesterday as requested by Bill, and I'll do Live and Let Die. But right now, though, Michael Jackson and Sir Paul. Okay, this is especially for our gold member. There are many perks being a gold member. This could be one of them, right? Okay, here we go. So what shall I do first? Sir Paul McCartney? All right. When I find myself in time of trouble, Mother Mary comes to me, speaking words of wisdom, let it be. And what about Michael Jackson? Another day is gone, I'm still all alone, though you're far away, 'cause I am here to stay. You never said goodbye. There you go. And we do 14 other voices, and all of that you can enjoy. Hopefully you'll enjoy with me on Friday night. Thank you for being part of our family. All right. It's 15 minutes before the bell goes. We're just about to ring the bell, sponsored this afternoon by Sensei Crypto. And we'll be ringing the bell in just a few minutes from now. Though you're far away. I was just listening back to make sure it works. All right, okay. Virgin Galactic is still running up. Cool. You are welcome. Gold. The S&P. Coming up. Amazon. Apple. NEE. 74.04. I just bought for 74. Enphase. Coca-Cola. J&J. CVX. Tesla. I've now gone from 14 shares to 24 shares. Remember, Courageous, another thing you need to be aware of, it's very, very important. My channel, when I started this channel, It was just to help people, right? It wasn't to, as I say, grow a YouTube channel. It was to build a family. The same as I built with my music around the world. I started with $5,000. I put $4 a week in. All right. This is my portfolio. This is my real money. This is all of my real money. I use Robinhood. And if you want a referral code to Robinhood to win some free stocks, ask me and I'll give it to you. But I started this with $5,000. I put $4 a week in. That's it. Have done now for months. Soon to upgrade that because I've now paid for my computer to run this studio. That was $4,500. I bought a brand new Mac Studio M2 chip, M Ultra chip, to give the best quality of sound and everything else. So that's paid for now. So I'm now able to increase that next month. Hopefully put maybe $30, $40 a month into my portfolio. My only income is YouTube. This is my only income. And I don't earn that much on it because I go live all the time. It's the members that fund what I do. But anyway, one day I think I'll have 1 million members, so I'll be all right then, won't I? Anyway, so I'm investing in myself. So here's my portfolio. Started at $5,000, and you can see we're at 57.6, $4 a week. So this is real. We're not promoting anything. We're not married to any stocks. We're just talking about it as it is. All right. And some people don't like that. They want me to rah-rah the stock and say what they want to hear. When I'm not interested in doing that. I'm not trying to sell videos or get everyone excited about any particular stock if it's not the case. Okay. 10 minutes to go before the bell goes. We're pretty much coming to the end of the show. We're going to ring the bell at 3 o'clock and then we're going to end the show. Now, we are back in the morning with the McDonald's earnings. If I can get some money out of, if I can get my Roth IRA to pop up in the after hours with NEE, which is highly likely, if I could make 5% profit or even just a couple of percent, I will take my money out of NEE because I've now got plenty in my main account, tax-free, doesn't cost me any money, and get ready to buy McDonald's tomorrow. Say what you gonna say. I can wait another day until I call you. Ebony and ivory live together in perfect harmony. When I find myself... Oh, I did that one already, didn't I? Did that already. Don't do that again. Yeah, say, Michael Jackson. I like it. I'm a lover, not a fighter. Anyway. So yeah, tomorrow morning is McDonald's. If you want to join us for McDonald's, let me give you the link. Here is McDonald's in the morning. We'll be live first thing early, hoping to buy some more land with McDonald's. First thing in the morning, I'll be there. There's the link. Let's see if we can buy some land in the morning. Remember, we're not buying burgers, we're buying land. That's what it's all about, right? Anyway, I think we've come to the end of the show. We've got 10 minutes to go. I didn't get those links from Sensei this afternoon, so we'll have to do that tomorrow now. We've run out of time. Virgin Galactic, where's it going from here? Gold, it's got to go to 180 before I buy it again. The S&P, up and down like a yo-yo. People taking profits, overreacting. NEE coming straight back up again. Whoa, what a bargain this would be. If I can get 1.68, $21 up, I can sell that because I've just added a huge position now. 10% of my portfolio. I'm going to have so many dividends. Look at that, $4,000 of NEE, 1% down. Absolutely fantastic. They beat on earnings. Everything's great. Can't wait. That's going to work out good for me. So what I can do is trim back on NEE risk is by simply selling my Roth position and then in the morning be able to buy some McDonald's, because even where it is now, it to me is worth buying. I'm up 5% on it. I do it for the dividends, but I do it for the security of land. No worries. Oh, there he is. He's back now. Sensei, we'll do that in the morning, okay? Do that tomorrow. Send it through to me, and then I can add it in. If that's a permanent thing that you want me to do, talking about your Twitter account and your YouTube channel, I will build it in and I'll have it saved in my show. I just don't have it as a part of the scene, if that makes sense. I know that makes sense to you now because you've got Ecamm Live. Anyway, Google didn't go up today, did it? Didn't sell off either, so it's not worth buying yet. Microsoft, same thing, didn't go anywhere either. No opportunities there. Remember, you don't chase a stock, you don't chase it up, you don't chase it down. You look for value. That's what I do anyway. Robinhood, great. Can't wait to see the interest rate go up tonight and start earning even more money on my uninvested cash. I love it, especially when I can start bringing more money in. P&G going up. Rumble, 6% out of the money. Let's make 6.8. Make a bit of money on that one. I'll be out. There's better opportunities than Rumble in the market. Okay. All right. I think we are going to wrap up today. So let me go to the Discord. I had not seen Courageous come in yet. Sensei Crypto, introduce yourself to Courageous. He's just become our latest member. He's become a gold member. Sensei Crypto handles our crypto for us, our crypto challenge. I'm on the $1,000 to $10,000 challenge. This is my XRP. I've got a $5 price target. I've got $1,000 worth of XRP, as nearly as much as I have in Bitcoin, actually. Polygon, I buy it because of the use case. I bought it at 38. I hold it for my gas fees. Bitcoin, my average is 15,000. It doesn't live here. In case you're going, you've only got $13. No, I've taken it off to my ledger. That just shows my balance, just shows my average. Meta, Rio Tinto, still too expensive. Faraday, not yet. Funware, just want to get out. Rumble, welcome to the family, Courageous. Indeed, indeed, indeed. Plug Power, Rocket Lab. We delayed the flight. That's what that drove the price down, I would imagine. The rocket business, it always reacts like that if anything negative comes along. Tilray, great today. The stock grew 10 times for me today. Institutional interest. Tilray became a much more valuable stock. I'm still down on it. I didn't buy anymore. I'm not buying anymore. I'm not selling. I'm holding. I see it running to $6. They grew enormously today. Any crypto questions, send them my way. Yep, don't send them to me. Don't talk to me. Talk to Sensei. And if you go on to our Discord, you can talk to Sensei and he can share you with all his information. And anyway, we're live up to 10 hours a day every day. Back again in the morning with McDonald's 5 minutes ago before we ring the bell. And McDonald's is now coming up. See if we can buy this in the morning. If I can get some NEE sold from my... here, it's going up. Only $20 to go. There you go. Get this up to $75. I can sell this position in my Roth, put the money back, tax-free, and be very, very happy with that. Thanks, Sensei. Yes, he will support you in any way he can. Again, he is there not to make headlines and do things like BitBoy and Cryptos R Us, make promises and wild, crazy claims. We're not here for that. We're not here to promote anything. We're here, I believe, that if you help people and support people, the money takes care of itself. The money's not even an issue. I don't even concern myself with it. All right. Okay. S&P going down. Gold still holding up. Virgin Galactic holding up 5.28. But remember, we're down 90%. So just before, I know we haven't got anybody who's not a member right now anyway, but I will get people tell me tonight, oh, that's it. Look, Virgin Galactic's great. It's down like 98%. It's not great, okay? It's not great at all. Anyway, whatever. Be very, very careful. 4 minutes to go. Let me go through all my positions here. If you've just tuned in, we will have the Fed Jerome Powell FOMC report coming out after this event. It will be enhanced and loaded as its own video. That will come out very, very shortly. If you've not yet subscribed to my channel, please do. And as always, tap the like button if you like it, or tap the down like button if you don't. I don't mind you doing that. Actually, it's good for both of us if you do that. 9617. We're very, very close. When we get to 10,000 subscribers, we can do our special, our next fundraiser. And it's going to be for, I think it's going to be for the Queen of Self-Braiding, our next fundraiser. And the reason why I'm holding to 10,000 is I want to do a registered charity with no fees at all. It's my next challenge that I want to get to. All right. Okay, I will open up. No point now. The broadcast lounge is closed. If you want to call in, you can, but I've closed the broadcast lounge down now. We're not doing any phone-ins now. We've shut that down. We're just about to end the stream. We've got 3 minutes to go. Seeing if we get some after-hours action. I think we probably will. There's the Queen of Self-Braiding. We just talked about you a few moments ago. This is the Queen of Self-Braiding. We've got a new member here today. Courageous came in. I like the hat. And he's from the United States. The Queen of Self-Braiding is actually from Cornwall. I'm from Cornwall. She's from Dallas, Texas as well. Same as me. All right. We're just trying to see now if we can get any action for that NEE purchase that I made earlier. Yes. There we go. Oh, I'm so excited. I lowered my average. Look, I was down 4%. I'm down just 0.9, $40 on a $4,000 position. I have been listening, of course, I know. There you go. NEE overreacted today. Anyway, I'm very excited about this. 3 weeks ago for the dividends. I'm trying to earn $100 a month on dividends. Born in Uganda. There you go. Lovely stuff. Now then, if this goes up, I can take a profit from my Roth position. All I've got to do is make $18 on 1273, and then I can trim it back because there's no point being overly heavily exposed to any position. I've got $1,200 I don't need to be in. I can prepare some cash on hand to buy McDonald's in the morning. If I can make a profit on it, that would be fantastic. Okay, I've got plenty of money in NEE over here on the brokerage position. That's a very heavy weighted stock, but I'm keeping it for the dividends, and then I will trim off after the dividends. Okay, there's no point having too much of any one stock. You got to trim back. We're not marrying stock or. Oh, 1 minute to go. And we've got the Sensei bell in hand. Remember, for $10, you can sponsor the bell for the day. If you have a business and you want to sponsor the bell, the Sensei bell, you can sponsor this bell for the day. If you want to, you can do that. Okay, we're about to ring the bell. NEE's going up very quickly. That will really push my portfolio up nicely. Let's go into the main portfolio. There we go. Just 30 seconds to go. Here we go. 15 seconds to go to ring the Sensei bell. And we're looking at my position. If we can see a bounce here. It's coming up quickly now. 74 I bought it for. It's now 74.38. It's moving very, very quickly into the close. We got 3, 2, 1. All right. All right, you too can sponsor the bell if you want to. $10 a day, you can sponsor the bell. All right, there we go. We're at 74.37 on NEE, and it is moving up in the after hours slightly. Let's wrap up our show. And there it is. Sensei Crypto sponsored our bell. If you want to know more about Sensei and all his services, look below the video and you will see all his links. I know it sounded like Courageous is interested in crypto. I don't handle my crypto. I leave that all to Sensei. If you want to be another benefit of being a member and a gold member, indeed, you will get a lifetime discount to Sensei services if you use that code LucasAids. And I'm going to give you the website. I am on the $1,000 to $10,000 challenge. Sensei lives and breathes crypto every day. He studies it for me, tells me what to buy, when to buy it. I'm not recommending anyone just do that blindly. However, I do it blindly because I haven't got the time, and Sensei does a great job for me. And I've gone from $1,000 to over $1,600, and I am very, very happy with that indeed in just a few, 6 months? Anyway. Here is Sensei's website. This is Sensei Crypto's website, and over here you can see there's loads of free content you can get, but as a member, you can use my membership to get a lifetime discount with Sensei. Basically makes my bronze membership free, or thereabouts, just about 99% of it. There is the free content. He'll do charts for you, analysis for you. If you want a paid service, you can pay, and you can go to him for other services should you wish to do so, but you get lots for free, and it's all there. Again, he does it to support my channel because we want to go the best channel in the world. It's not there to hype or promote anything. It's not what we do. All right, there, the link's in the chat if you want to go and check that out. Fantastic. All right, time for me to go. I will see you all back in the morning for the earnings with McDonald's. Hopefully you'll join us for that. But that's it from me. Don't forget, Friday night is music night. We've got another music night this Friday planned. Make sure that you join us for that. And NEE still going up. The portfolio is looking nice. Let's now do day trader of the day. There you go. I'm beating the market again. I'm in green. The S&P is in blue. I'm beating the market, as you can see. I'm beating it very comfortably on my Roth IRA. And there you go. 57.8 was our all-time high, and we're just off it very slightly. Okay. Consistently growing all the time. Okay, day trader of the day. Go to your main position. And I am up 0.16%. Up 0.16%. Here we go. This is our competition that we do every day. Put a 1 minute on the clock. Who is... Nice show. Gotta go. Thank you ever so much indeed. See you soon. 1 minute on the clock. And thank you again for becoming a gold member. It's because of you, sir, that I'm here. I live on the memberships. That's how I pay my bills, which is hardly anything, but it's starting to grow thanks to people like you. Thank you very much indeed. Right. Here's the first person posting up 0.16. Up 0.05. I'm winning so far. Anybody beat me? Up 2%, said Sensei Crypto. Up 2%. Very nice indeed. Any advances on 2%? Few seconds to go. Any more? Any more for any more? All right. Stephen Lewandowski is down very slightly at 0.58. Sensei Crypto, but with time has run out. Sensei Crypto, you are our winner this afternoon. Thank you for your honest trades. Give him a thumbs up. There you go. Sensei, well done. There we go indeed. Right. It's time to get out of here. Sensei, well done to you. That's it from me. Let's roll the credits. Let's roll the credits and see the stars of our show. And of course, Creagus will come up now. Here he is. He's going to come up. Roll the credits. Let's get out of here. I'll see you back in the morning for the earnings with McDonald's. All right. Here we go. Stars of our show. Subscribers. Nelly, Anil Patel, Creagus, and Ollie. Members, Crag and Creagus became our new members, and Crag celebrating his silver membership, and Creagus became our 12th gold member. Absolutely fantastic. Congratulations, Sensei. Mike up 2.47. You were too late, Mike. You snooze, you lose. Right, look at the portfolio. I said we might get some after hours action, and it's actually a lot more than I thought. There it is. That must be then my NEE. I said it would. Let's have a look at it. It's up 0.01 in the after hours. So we're now at 74. Then we must have some action with Tesla. Yes, we do. Tesla is moving up quickly. Yes, it is. Robinhood is also moving up as well. Yes, it is. This is good. I think we just hit some new all-time highs. Yep, we're $20 away from our all-time high. Fantastic. What a great way to end the show. Consistently beating the markets, consistently up. We love it. What more do you want? That's it from me. I'll see you back in the morning for McDonald's. If I can just make another few bucks with NEE, I will sell it, tax-free profit, in my Roth IRA, and tomorrow I shall buy McDonald's regardless of price. Regardless of price. Meta. We just had Meta available after hours. Yes, Meta has exploded. I've just noticed it. Here it is very quickly. Meta is reporting tonight. We're not covering Meta. It doesn't get a big audience. But as you can see, it's up big time. That's it. Until tomorrow, take care of your money, your crypto, yourselves. As always, each other. What a great day. Bye-bye for now.